The goal with charting is to separate the signal from the noise. Hello, everyone, and welcome to the Gibraltar Investment Group Stock Market Weekly Wrap Up for June 2nd, 2024. I'm your host, Dr. BJ Love, and I'll be bringing you this week's update. Here at Gibraltar, we use time-tested methods and indicators that help us to navigate these markets with confidence, certainty, and clarity. Overall, the market ended on a positive note. It was a volatile week and kicked off with the NASDAQ and the technology sector hitting new record highs. The blue chip Dow Jones Industrial Average tumbled 958 points over a 3-day stretch, down nearly 5% since breaking the 40,000 mark. The NASDAQ was down triple digits early on Friday before a late bounce to end the month. A Friday rally wasn't enough for the major averages to recoup their earlier losses, and the Dow Jones Industrial Average was finished down for a second straight week, while the S&P 500 and the NASDAQ snapped their 5-week win streak as May came to a close. For the period, the Dow Jones Industrial lost 383 points. The S&P 500 slid 37 points. The NASDAQ fell 186 points, while the small cap Russell 2000 bucked the trend and picked up a half a point and settled at 2,070. The VIX dropped 1.55 points and closed at 1292. As we often reiterate on this broadcast, that as long as the VIX stays below that threshold of 20, we will continue to grind higher in the general markets. And that has been happening for the last year. Crude oil prices fell 75 cents and closed at $77.15 a barrel. Gold prices lost $19 and finished at $2,347.60 an ounce. Bitcoin closed the session at 67,600. Now the outlook for the market. The technical condition of the market deteriorated last week as the major averages finished the period lower, with the S&P 500 and the NASDAQ snapping their 5-week win streak. The technical condition, the technical indicators slipped back to a neutral position. The Dow Jones Industrial Average was the weakest index as it dipped below its 55-day exponential moving average. Breath, the heartbeat of the market, was positive. Now, with that introduction, let's jump right into these charts. As we usually do, we're going to start with our weekly foregrid, and we're going to look at the overall market posture on the chart. As I go ahead and expand the chart, we're looking now at the S&P 500, and as you can see right here, we had this down week. However, we are still in a green bullish background for the long-term period. Remember, all things being equal, prices tend to move in the direction of the largest chart. And this is our largest chart. This is our weekly chart. And as you can see, since that breakout back in October, we have been going up, 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 up. We had 3 weeks of down and then several weeks of up. And this is our first week of down, as we illustrated in the introduction. So still bullish. However, we are experiencing a pullback. Moving on now to the Dow Jones Industrial Average. As you can see, for the past 2 weeks, as we mentioned in the introduction, it has been going down. However, all of this correction is taking place above a rising moving average. And you know that is our rule of thumb, as long as the correction is taking place on the long-term chart now. And we still have this green background. We have a proprietary configuration here that when we shift from a from a bearish or to a bullish or back to a bearish posture, this chart will turn green or red, green meaning bullish. So what we are experiencing now is a minor or a shallow pullback, which is indicated here with our supporting indicator, the MACD. It is in a negative posture. However, with the pullback over the past 2 weeks, it's still the Dow Jones Industrial Average is still in a bullish posture. Moving on now to the NASDAQ composite, the tech-heavy NASDAQ composite. We see the same configuration going here. The background is green. That means we are still in a bullish posture, even though we had 1, 2, 3 weeks of down. All of that correction took place above a rising moving average, and now for the past 1, 2, 3, 4, 5, 6 weeks, we have had a uptrend, and now it seems to be topping out right here. But as you can see, the wick of that candle touched our 10-week moving average and bounced off and closed higher. That is the NASDAQ composite, still bullish. Now we're moving on to the Russell 2000. We do, again, still have that green background. We've had 4 weeks of prices going up on a consecutive basis. Here for the past 2 weeks, it's been going down. Now, notice here in our confirming indicator here at our MACD, it looks is a very tight configuration, almost what we call laminated. So it looks like this is probably, we have to wait, watch, and see. Going to cross over into a positive configuration, and that will give us a signal that this is a continuation of an up move, even though we've had 2 weeks of down movement. All right. So what is our takeaway? The market is still in a bullish posture, even though we've had a week or two of pullback, which is usually healthy for the market. We have not had any negative crossovers in our 10-week and our 40-week moving average, and the prices are still above those moving averages. So we're confident that this is just a negative pullback, and we'll wait, watch, and see how the rest of the month plays out. So that can take us now to our triple screen. And we're going to look at the positions that we currently have and how they look on the chart. Oh, go through the sectors. All right, so the strongest sectors for this last week was the communication sector and the metals sector, XLME. As you can see, this is our long-term weekly chart. We have a very good relative strength and very good price action. Prices moving above rising moving average, and we have a positive reading on our Fisher transformer, which is our leading indicator on this particular chart. So with the XME, we have several investment going on in the precious metal stock. One is SLV. Just go ahead and go through these right now. As you can see with the weekly chart, we are swelling well. We bought this at 22, and now it's hovering at around that 28 level. And that's our silver take. What we purchased as well was USAS. As you see, it's just starting to break out here. This is a penny stock. We bought this at 29 cents. And now, when he gave us the signal, we went ahead and purchased it. And right now, it's hovering at around 35 cents and continuing to move on the day, on the weekly and the daily. Looks like we have our bull stack, which we like to see. And you would say, Dr. BJ Love, what is a bull stack? This is a Fibonacci channel that we create with our exponential moving average. We have the 21, we have the 34, we have the 55, and we have the 89. When those are stacked positively in the market, we call that stacking the odds in our favor. And for that configuration, it is usually a 90% chance of the market continuing to move in that direction. So our next stop from where it is right now, we look to see this move into that 35, 36, or 37 cent area. So that is a very good percentage increase. We have all of the indicators working in our favor. We have a horsepower of 71. We have a positive reading on our Fisher transformer, and that's swelling well. What we're looking to add to when it gives us the signal is to the symbol gold, G-O-L-D. This is Barrick Gold, one of the largest miners and preservers of gold. It is right now going through a correction stage, so when we get the signal to move in on that, we most certainly will. And the next one that we're looking at when it gives us a signal to move into is BTG. This is a $2 stock. As you can see, it's starting to break out right here on the weekly. We do have some resistance there at about $2.89. So when it breaks through that, it looks like it may be off to the races. So we're going to wait, watch, and see. And those are our potential other plays into the precious metals. What is another strong sector? XLF. And that is the financial sector. It is taking a little bit of a rest right now, but our financial stock that we're looking to buy is called XOCL, right? OXCL, is that right? No, I just wrote down long and buy. Probably bear with me here. OCXL. No, I'm gonna have to look this up real quick. I hope we don't run out of time. Oh, we got plenty of time here. So, where is it? It is called OCXL. Let's see. No. Bear with me here. OLCX. I believe it is. Can't find it. All right, we're going to move right along with XLF. I'll mention that particular stock in the newsletter that will be coming out on tomorrow. It paid 20% dividend. That's going to be our financial play. And the next strongest sector, of course, is always technology. Technology, energy, always are very strong sectors to be invested in. And of course, our 12% dividend play with that is, can't forget this one, QYLC. Or QY, yeah, I forgot it, QYLD. Bam, there we go. And as you can see, we're just consolidating a little bit here on the long-term chart as the XLC is going into some correction. And what we're looking at here is a composite of the NASDAQ 100. You see, it looks to track the NASDAQ 100, and it pays a 12% dividend. So if this stock doesn't move 1 point up or move 1 point down, we still get a 12% dividend that is paid weekly. And we'll go into more detail about how we get weekly dividends from the QYLD at a annual 12% rate in the newsletter. So that's our tech. So what about things that we hold? What are we holding and doing well for? Of course, Zim has come out of the grave and broke out here several weeks ago. However, it did not resume that 100% dividend that we were used to getting. The dividend now is only 4.8%. Wow, you're talking about almost a 95% reduction in the dividend that we thought we would be getting, but now is making up for it in price power. So we have Zim, and it's working well for us right now after being a problem child for about a year. Next, of course, PBR is going through a little bit of a correction right now. This one pays us a 20% dividend. And as you can see, it went through correction here back in March, and then it pulled itself out. Now it's going into correction again, and it looks like it's starting to pull itself now out and bottom. We allow that kind of fluctuation with this kind of stock because it pays us a 12% dividend. We're going to go through one more that we have. ET pays us a 10% dividend, and EC pays us a 30% dividend. So with that, we're probably going to look at transforming some of the profits from Zim into EC. So with that, every day and every way, we get better and better. Every day and every way, we grow more prosperous, successful, and victorious, and God's love continues to surround us and fold us and enwraps us, and we go forth